Good morning, good afternoon, good evening, wherever you are around the world, a very warm welcome. As Chief Operating Officer at the Chartered Banker Institute, it's my very great privilege to be introducing the second day of our annual conference, looking at the different aspects of responsible banking. During yesterday's session, we heard from our speakers and panellists on what responsible banking means to their organisations and what they think is at the heart of responsible banking. Today, we're looking at that specifically from banks' perspectives, who are signatories of the UN Principles for Responsible Banking, who are implementing embedding this within their organisation, and it's forming part of their overall strategies. And we're also looking at what the future holds for the principles. Before that, though, I'd like to introduce our keynote speaker, Oliver Holborn, who's Director of Strategy and Ventures at NatWest. Ollie has responsibility for the group's strategy, sustainability, economics, ventures and corporate development. He joined NatWest in September 2018 from UK Finance Investment, where he was laterally CEO, and is responsible for managing the government shareholdings of NatWest Lloyds Group and UK Asset Resolution. And before joining UK FI, Ollie worked for Bank of America Merrill Lynch for nearly 14 years in a variety of roles and holds a BA in jurisprudence from Oxford University. Welcome, Ollie, and over to you.
Joanne, thank you. Good morning, everyone around the world. And thank you, Joanne, and to the Institute for asking me to speak to you today about how the UN Principles for Responsible Banking are being implemented by banks. As Joanne said, my name is Ollie Holborn, and as Director of Strategy and Ventures, I am delighted to be here representing NatWest. And like many of you, I look forward to when events such as these are in person. Our relationship as an organisation with the Chartered Banker Institute is as one of the founding banks that set up the Institute. And so our relationship goes back to 1875. We're very proud that our frontline colleagues have professional accreditation within 24 months of joining our team, and that has helped us to have been awarded corporate chartered status. But on to the topic of the day, and first some context. So I'm going to talk about why I think the UN principles are important and how and why we should be implementing them. I'll also touch on some of the initiatives NatWest have introduced and give you my thoughts on implementation ahead of the panel discussion. Since banks failed society, in many cases literally during the global financial crisis, a great deal of consideration has been given to how we make banking function better for society. We were reminded again during the pandemic of the fragility of the banking system, given the level of support across the world that governments had to provide. Even in an environment where banks are much safer, have much more capital, and have arguably improved their level of service to the real economy significantly over the last decade. We also know the impacts of COVID will be long felt. The British Academy refers to the next 10 years as the COVID decade. Minouche Shafik, the economist, has written a fabulous book entitled What We Owe Each Other, A New Social Contract, which talks about how we might deal with the after effects of the pandemic, where, at a practical level, it has impacted the young, the vulnerable, and ethnic minorities much more than others, highlighting again the increase in inequality in our society that needs addressing. And then, when you consider climate change, perhaps the biggest challenge and opportunity of our lives, it is clear that banks need to align with the vision society has set out for its future in the UN Sustainable Development Goals and the Paris Agreement. So at NatWest, we believe the UN Principles for Responsible Banking are an important contributor to how banks can be responsible and do well by doing good. On a more personal note, I have 3 young children, and as I get older, I definitely feel a greater responsibility towards leaving them in a society and on a planet that is still full of life and opportunity. After all, there is no planet B. So we all need to play a role in helping protect the world we live in. And the role banks have to play as financial intermediaries is, in my view, a significant one. So some thoughts now on implementation. And there are 3 points I'd like to make about implementation of the principles. The first is infancy, the second is flexibility, and the third is commerciality. So on infancy to begin with, the UN principles of responsible banking are still young. Created in 2019, they've been around for a little over 2 years. So I feel we are very much in the foothills of implementation, with quite a long way still to climb. While we must follow the steps to have the principles embedded by 2024, I think it will be several more years until we really know what good implementation looks like, and we are able to see the tangible effects of change. The second point I wanted to make is flexibility. The principles-based approach with the 3-step process of impact, analysis, target setting, and reporting gives banks flexibility as to how they implement the 6 principles. And I think this is really important for 2 reasons. First of all, it encourages healthy learning among peers. And secondly, I think it fosters competition to progress with that journey towards sustainability and responsible banking as soon and as effectively as you can. That said, fully integrating the principles into business strategy is both an opportunity and a challenge, particularly given those who invest in banks are on their own journeys in terms of the importance of responsible banking and all matters related to ESG in their investment decision-making process. And at NatWest, we took our first pass at reporting on our integration in March this year with what we referred to as our Purpose in Action document. And we will look to improve on that in coming years. And the last point I wanted to make is commerciality, or the commercial imperative. My belief is organizations of significant size, be they banks, or perhaps in time, large non-financial corporations that take these principles and implement them well, will over time attract a lower cost of capital because their earnings will be more resilient and therefore deserve a higher multiple. We, as banks, I think, are some way from providing investors with the information they need to determine if a bank is truly responsible and whether it therefore justifies that premium rating and lower cost of capital. Finally, I wanted to give you a few reflections from inside a bank. So what is our approach on implementation at NatWest? I think first to say culturally, we are approaching it with an open mind and a willingness to learn and collaborate. One key pillar of our strategy is innovation and partnerships, because we believe we can only succeed in partnership with others, particularly around big societal issues like climate change. Behind all of this is our purpose, which is to champion potential and to help people, families, and businesses to thrive. Our purpose was shaped closely by working for Blueprint for Better Business, which is an independent charity which aims to create a better society through better business. And the UN principles will help us, I believe, and those in the banking industry become more purposeful. Being purposeful to us, I think, is best described by 2 ideas. First of all, making decisions based on a broad view of stakeholders, as per the Principle 4. And we do this by asking ourselves, are we being honest and fair with customers and suppliers? Are we being a good citizen? Are we being a responsible and responsive employer? And are we being a guardian for future generations? The second idea is really trying to move towards building better long-term relationships with our customers, even in a digital world, by serving our customers with products and services when they need them during their lives at fair and reasonable prices. Our purpose-led strategy aims to deliver longer-term sustainable performance and seeks to accelerate social value in areas where we believe we can make a meaningful contribution. In our case, we've chosen 3 areas: by helping try to minimize the impact of climate change, by championing enterprise, and by supporting learning inside and outside the bank. And very, very briefly, a few of our initiatives. On the learning side, we are proud to be supporting social mobility through our Career Sense program that will help young people become more employable. On the climate side, we're a founding member of GFANZ, we're financial sponsor to COP, And we're really trying to practically help our clients transition to a net zero economy by reducing their emissions, but sensibly and over time. And for a bit of fun, for those of you old enough to remember Top Trumps, Cop Trumps, which is being developed through a competition in schools across England, will be landing at a venue near you very soon. And then finally, on enterprise, we are supporting as many women as we can on the back of the Rose of You through specific funding, mentorship, focused events and support to help set up more great businesses for the future. Is our approach to implementation the right one? I think so, and I hope so, but I don't know so. Our stakeholders are the better judges of that over time. What I can tell you is that it is authentic. It comes from the top, so from our chairman, Sir Howard Davis, Alison Rose, our chief executive, and the executive committee all the way down. I'll also add that I think it's a never-ending journey, and it's a gradual path to self-improvement. We will be judged as ever by our actions and not by our words. So in conclusion, the UN principles are a force for good, and the ethical and business case for implementing them is clear, although implementation is in its early phases. But they form part of a rich patchwork of things, helping banks and financial institutions regain trust with people, families, and society. That's why we are proud members and signatories of the UN PRB, and we also support the UN Global Compact and have signed up to the principles of responsible investment. While the first pass implementation of the PRB is a 5-year plan, it will take many years until we determine what good really looks like on implementation. During that time, we need to be open to learn from one another and to continue to ask what is working and what isn't, changing course and pivoting as often as we think is necessary to meet what society requires of us. So today's panel is a great way to work together and tackle that implementation element head on. So with that, I will say thank you to Joanne, and a very big thank you again to the Chartered Banker Institute for inviting me to speak. And I hope the rest of the day goes really well. Joanne, back to you.
Oliver, thank you so much. Really insightful. Thank you for sharing the activities that are going on at NatWest Group. And I think not only have you given us some additional reading material, so very interested in what we owe each other. So I'll be definitely putting that in my next book to read. But I also really thoughtful about your comments about the 3 areas of that, sort of the principles being in their infancy and how we deal with them flexibly and also commercially. And I think that really links well with our forthcoming panel discussion, where we're looking at how they are implemented and what does that mean for different organizations across the globe and what their priorities are as well. So thank you so much, Oliver, for joining us this morning. I'd now like to move on to our panel session. I'm absolutely delighted to introduce my panelists, who are from, as I said, from global organizations. So we've got representation from Africa, Europe, and Asia this morning. So really delighted to bring the panel on board. If there's any questions that the audience has throughout the discussion, please use the chat function and we'll try to include those later on in the session if we've got enough time. But yes, so if I just, I'll introduce the panel. So we have with us today Antonio Balbriga, who is Global Head of Responsible Banking at BBVA Bank, who's in Madrid this morning. Good morning, Tony.
Good morning, John. Great to be here.
Thank you for joining us. I also have Dr. Johanna Diektal, sustainability expert for PRB, implementation support manager in UNEP FI. Johanna, I think you're going to be a popular lady after this session, hopefully with your implementation expertise. So welcome to the session.
Thank you so much. Welcome to the audience. Hello, everybody.
Thank you, Johanna. I also have with me Hussam Sultan, who's Regional Head of Islamic and Commercial Banking at CIMB Bank. Good morning, Hussam.
Good morning.
And last but not least, we're delighted to be joined by Mr. Hassan Usam, CEO and Managing Director from Jazz Bank in Nigeria. Good morning.
Good morning.
Hassan.
Good morning, and thank you.
So panel, I'd like to, so a warm welcome to you all, and I'd really like to start our discussions for a question really to our banks on the panel this morning. To think about really, in summary, what has the principles of responsible banking meant to your organisation, and is there any components that you've found challenging in line with the principles of responsible banking? So I maybe come to Hussein. Can I come to you first for that one?
Of course. Thank you very much, Joanne, for the question. And firstly, thank you to the Institute for inviting CIMB Group to be part of this event, and also for inviting me to participate in this panel. It gives me great pleasure to be here with you this morning. You see, when we joined the principles back in early 2018, it was a case of us approaching the UNEP FI. It took probably a good part of a year to build a strategy within CIMB Group as to what does it mean for us, the new direction. What does sustainability means? The principles first, they were called the principles for sustainable banking before they were changed to responsible banking, if you remember. So what does it mean to be a sustainable bank in that environment? Does it mean just being conscious of the environmental impact? Does it mean to be just conscious of the social impact? Or does it mean a little bit more than that? And the conclusion we came to is that, this is a little bit more than just looking at one component of sustainability. That includes engaging our stakeholders, engaging our customers, our investors, our staff, having everyone to recognize the role banks play in any society. And, I think I would claim that, at least in the business community, in any economy, banks probably play the second most important role after the government and the regulators. Banks, provide funding for businesses and individuals. Banks calculate the risk, and they put a price to that risk. And banks also, discuss future plans of businesses. And recognizing that, I think it was the first step towards us appreciating being responsible and what responsible means. And I think when the change of the principles became, moved from being the principles for sustainable banking to the principles of responsible banking, I think that was the right time for us also to recognize that we all have a responsibility and a big, massive role to play as banks. After all, we finance those who do good and those who might be the polluters as well. Banks are considered to be in the heart of all activities of the economy and society. And hence, banks have a major role to play there. Banks also can be victims of some of these catastrophes that happen, but banks have a big role to play. And that was our recognition in 2017, early 2018. And that's when we decided to approach UNEP FI, and we recognized we were the first bank in Malaysia and the first bank in Southeast Asia to join, and we were at the founding member of the group that published the first draft. So that was the story behind us joining, is that we recognize the responsibility we have as a bank, and we continue to recognize that. We also recognize that we are not alone. We cannot do it. It has to be an international. This is now an international problem or an international issue that we are all facing. It's not one country or one society or one business, definitely. This is a global issue, and hence we are facing it together, and hence we should draft the solutions together.
Thank you so much, Hussam. Tony, if I could just come to you. So from BBVA, your perspective and anything that you found challenging when you signed up to the principles?
Yeah, well, thank you and congratulations for the session today, especially today, that today is the 2 years anniversary from the official launch of the principles at UN headquarters in September 2019. No, well, we were also a founding member. We are based in Madrid, but we have very strong presence in Latin America, also in Turkey. So we are practically 2/3 of our gross income comes from emerging countries. And well, we understand responsible banking as well the way to put in a systematic way the impact in people's lives and society in our decision making. No, so we found the framework of the principles extremely useful. No, I would say that I would like to highlight three main topics. No, first, when we well signed first the first draft, as was mentioned by Hassan, and also the launch in September 2 years ago. First was a clear endorsement of VVA approach to sustainability. We had announced our pledge to sustainable finance just in February 2018, so 1 year and a half before, with a commitment to mobilize 100 billion, and that was a clear endorsement of our approach to sustainability. No? Secondly, it was a clear how-to guide, no, to provide support to any bank to embed sustainability into the business model. No, I think that is very important. What it was mentioned by Oliver in the keynote previously about flexibility. No, this is a framework that can be useful for those banks that are more advanced, but also for those banks that are just starting the journey. So I think it's not, in our case, that was not only as an endorsement of our strategy, but also a good guide to help any bank to make this journey. No? And finally, I think that the principles for responsible banking is also a tool for collective action. We need to promote a systemic change. We need a great coalition among different banks to affront this new reality with climate and environmental and social challenges in front of us. We have seen that the principles has been a clear framework to develop commitments in the area of climate, like the collective commitment to climate action, and now the Net Zero Banking Alliance, but also another commitments that are coming, like the commitment that we are working together with other banks at UNEP FI regarding to financial inclusion or financial health. So a clear endorsement, how to do guide, and also a tool for collective action, I think are the main takeaways from principles for responsible banking at this moment. Thank you.
Thank you, Tony. Hassan, can I just bring you in just now for your perspective on your bank's approach and any challenges you've faced?
Yeah, thank you. Thank you for having us also on this call. For us, a very young institution, we're just clocking 10 years, but it was clear to us, being an ethical, an Islamic bank, which is akin to ethical banking, that the principle makes a lot of sense. There's second nature to what we call for. So it was very easy for us to want to adopt this principle and become one of the early signatories in Nigeria. First, it's an opportunity for us to implement what is in the DNA of Islamic finance, which is to try to work for the betterment of society, and especially those at the lower strata or the pyramid in the society, to also be responsible when using resources. These are issues that already the principles of Islamic finance also underscore. So it's easily adaptable to the principle. So it becomes much easier for us to quickly recognize. And it goes with the mantra of the organization also. JAI's mission says making life better. So making life better to all stakeholders means adopting some of these principles of reduction in poverty, ensuring good health, education, gender balancing, and ensuring that those that are fighting poverty are assisted to. So all of these principles becomes easy for us to adopt. And we find that being a member of this community will give us a more disciplined approach to achieving the inherent expectation or inherent objective of Islamic finance. So it's quite advantageous for us. And it's also in line with what the local regulator has also institutionalized for the banking industry in Nigeria, as a group to be part of a team that will spearhead the implementation of financing elements that will reduce poverty, being responsible when you are financing customers, and also in your operation trying to reduce the negative footprint of your activities. These are some of the considerations that make this easy for us to join. Of course, there are challenges. Those challenges normally for our environment include the quality of data that we are working with, and also the situation around inflation and exchange, foreign exchange volatility, which negatively impact on those you are trying to support, because the vulnerable in society are the first that get impacted with issues about inflation and devaluation of your currency.
Hassan, thank you so much for that. And I think the sense from the panel that I get is about this working in collaboration as a global banking community, as opposed to in competition and learning from each other. That's really coming through. So thank you for sharing your own individual experiences. Johanna, if I could just bring you in here, because as Tony pointed out, it's exactly 2 years to the day to the signatories in New York. Really interested from your perspective about how pleased you are with progress so far and the overall effectiveness and the principles. And I suppose it's not have they achieved their original objectives, because I think that's a journey that people are on, but that sort of progress being made. So just interested in your thoughts regarding that.
Thank you so much, Joe. And yes, I can only echo what you've been saying. It's the 2-year anniversary today, so it's even like a birthday party panel that we're having today. So thanks for having us. Yeah, as you said, 2 years ago, principles were launched. What has happened since then, and that is also some sort of progress that we've seen, is that the signatory group has actually grown quite substantially. We almost have 250 signatories now, representing 40% of the global banking assets. So that is one aspect. But of course, that's only a side aspect. We talk about implementation now. It's important to understand that the banks, by signing up to the principles, commit themselves to implement the principles within a 4-year period. So today, for founding signatories, the ones that have joined in September 2019, we're actually at the half-time mark of implementation. And what we've done is we actually assessed that progress in a structured way by conducting a survey among the PRB banks. The detailed findings from that survey will be published in the report that's going to be published in 3 weeks. So if you're interested, collective progress report going to be published on October 14th, and then you can read more details, but I can give you some findings from that report, how much progress we've actually seen. So what we found is that signatories they are making progress in terms of internal changes, quite a lot of progress actually. So that means in establishing the systems and policies in order to set targets for action. That is one aspect. And some banks really undertaking a retooling of core banking processes. What we also see is that there are some early indications of progress as signatories start to shift financing and investment practices towards positive sustainability impacts. Now, these, of course, as Oliver also said in his keynote speeches, these are early signs of visible impact on the ground. That means impact in the real economy. I can maybe give you two numbers about that. So in the last year, 15,000 clients, for example, were advised by PRB banks on climate strategies. And we see that $2.3 trillion sustainable finance volume was mobilized as reported by 90 banks in the last year. So these are just two numbers that actually are a bit quantifiable about impact that we can see on the ground. And that is actually one of the most important success criteria that we have, how much visible impact is there towards the SDGs and the Paris Climate Agreement. Now, of course, the progress that differs widely among the PRB signatory group, as diverse as the business models and everything among the PRB banks is the progress. We see some good examples of implementation that are emerging from a small number of really advanced banks. What we also see is in terms of now content, what are banks actually doing is that the majority of banks is focused on climate and financial inclusion, those being the most prominent impact areas among the PRB signatory groups. Almost 90% having climate very high on the agenda, one of the most significant impact areas, and about half of the signatory group having financial inclusion as one of the most important impact areas. For other impact areas such as biodiversity or decent employment or gender equality, where also the impact measurement approaches are less advanced. We also see that banks are collaborating to produce guidance, tools, resources to move ahead with also other impact areas than climate and financial inclusion. So we do have some signs of positive contributions to the SDGs and Paris climate. Having said that, there remains a long way to go though. And some bank signatories must accelerate their actions in a couple of areas. And these are areas that also reflect the key challenges that banks are facing, because we also asked about the main challenges they have when they implement the principles. And the first one, probably not too surprising, is the topic about data quality and data availability. So that needs to improve. The second topic is to strengthen the impact analysis per se, to gain more technical knowledge, to deepen the understanding of how to review actually impacts, both positive and negative. The negative aspect is also quite new to a bank's thinking, I'd say. And then as a third point, increase action on other critical sustainability issues that at the moment are maybe a bit underrepresented, such as biodiversity, but also human rights, although they're identified as critical by research and other stakeholders. So what will happen now moving forward, as what it already was said, it is a journey. It is a long learning process. So there's also a living framework that we have. So the PRB support program will be informed by those findings. And there will also be a revision of some of the framework documents of the principles for responsible banking, especially the reporting template that we're using, that will be informed by the findings that we have from that collective progress review. So as it already said, we're in the infancy. It's a long way to go. It's a quite challenging way to go. Everybody's aware of that, but we're quite positive that we will reach the original targets.
Thank you, Johanna. Tony, can I maybe just come to you, because we've heard some, bold statements from boards, and Johanna's highlighted the progress that's been made, but also the challenge around some of the target settings and matrix that sort of exist are being created. So what activities are you seeing across the sector being implemented to embed sustainable practices, and how in your bank does this link to sort of target setting and the overall strategy?
Yeah, well, thanks. Well, I can share what's our lessons learned in this long journey. As Joanna said, this is a long journey. So on the 6 principles, I think we have made some relevant progress, and we have some practices that can be shared, and also and well, other banks have also this type of practices. No, the first, in terms of alignment, we have embed sustainability as a key strategic priority in our strategic plan, and we have select specific SDGs using the SDG framework as an input for our business strategy. Try to identify those 5 SDGs that are more relevant, where we can create more business opportunities for our clients and great impact. So we use SDGs with intentionality, which is, I think, is the change, the shift that we have to do when implementing the PRB. You know. Then on the principles on the impact and target setting, this is absolutely critical. We have areas of impact, as was mentioned, as climate and financial inclusion. In our case, we have set a target on sustainable finance mobilization, which was initially to 100 billion from 2018 to 2025, but we increased that target just a few months ago to 200 billion, because we have already mobilized 67 billion in 2.5 years. So we think that we have to move faster. But and we have included this target into our compensation scheme from our all employees this year. So, but then we have another target, which is this net zero commitment, no, to by 2050. We are also funding members like NatWest or other banks on this new alliance, this new coalition, Net Zero Banking Alliance, also convened by UNEP FI. And well, there we already set targets on coal phase out, and we are planning to set specific targets for specific industries at the end of this year, no, or a few months in advance to the commitment that's signed in April, no. So we are setting targets not only on the good side of the movie, but also on the most challenging one, which is a portfolio alignment. And we plan to also set targets on the financial inclusion side. On clients principle, we are progressing a lot, providing solutions. We have already a full portfolio of sustainable solutions in Spain. For all products, we have a sustainable alternative, and that's the approach we are having in all markets. Also, in engagement, I think that the principles provide us that framework that we need. We are engaging on a regular basis with all key stakeholders. I think the collective Net Zero Banking Alliance is also a good example. I celebrate that we have at UNEP FI this civil society advisory body, which is at the end is a body to challenge us as a community of banks, no, to implement the principles. And finally, around governance, I would say also very high level outcomes. I mean, we are obviously embed sustainability at the board level. That's clear. But we have done even an additional step just a few months ago, creating the global area of sustainability, reporting directly to the chairman and the CEO. And the most disruptive topic is that we have included in this area reporting from all business development areas. So the heads of business development in all countries will report to the global head of business development, but also to the global head of sustainability. So this is a clear signal that how we understand sustainability at the core of our business.
Thank you for sharing, Tony. That's really interesting about how you've changed the structure to support that as well. So there's that accountability in place. Hassan, can I bring you in, please, just from your bank's perspective, because I know that Johanna mentioned that the area of financial inclusion. I know that you're doing lots of work in that area, so it'd be really interesting to see how you're implementing and your strategy to support the principles.
Well, in terms of the tools we use to gauge the impact of what we are doing, we use the impact radar, which provides us a comprehensive set of impacts by categories of either the social, the environmental, or the economic impacts of what our business portfolios are doing. We also adopted the UNEP FI portfolio impact analysis tool, which is also another tool which we embrace. It helps us to clearly map up the portfolio and align them to the specific SDGs, and we set targets for both positive and negative impact, while also identifying monitoring and evaluation strategies for these impacts. I think overall, it's these tools help us to know the progress we are making in these areas, and then to energize us, as well as to make us make alignments, because as it's recognized, this is early in the day for the major impacts to come. But what we believe in our own society, the most important aspect of the responsible banking for us is the social aspect is important. The environment is important, but looking at our size and our portfolio, we prioritize the social impact, and we try to see how our intervention make a difference. And we do see with little capital injection to small scale SMEs and even micro, you find that the impact around the SDGs, even for those specific persons, is great.
Thank you, Hassan. Hussam, can I just come to you, because I know that there's some technology solutions that you've built in as well at BBVA, so it would be good to hear from you. Sorry, CIMB. So if you could cover that off, that would be super. Thank you.
Technology.
Yeah, just some of the solutions that you've implemented to support the principles.
I mean, to the point that was mentioned by Anthony and also Hassan, with regards to alignment, before I get to the technology part, alignment is one of the most significant or key advantages of the principles. Why? Now, imagine if every bank have their own set of interpretations of how they could translate the SDGs into products and services, how they could interpret those targets, build their targets. What the principles have given us in terms of alignment is to have a standardized approach to all these topics. I can mention here briefly that, and the latest ones that we've got engagement for is guidance on biodiversity target settings, for example. Now, if you don't have a unified standardized approach to things like this, or financial inclusion target setting, or climate target setting, these are all very important, firstly, to understand and get the definitions right, the approach right, the methodology right. Technology then comes as an additional layer that will facilitate access to banking products and services. We have recently, in terms of increasing our engagement with customers, launched earlier this year a tool that will enable, especially the SMEs. I mean, now this is, whenever we talk about green financing, for example, or sustainable financing or climate financing, the first thing that comes to mind to most people is the bonds markets, the project financing. And indeed, these are the large tickets ones. But the SME segments are almost neglected because, in most cases, they cannot afford the cost of transformation. They will not be able to afford the consultants needed to start that transformation. And hence, the focus will be on the large tickets, on the sovereign bonds, on the project financing, etc. So what we launched here using technology is a tool that will enable those SMEs to assess their own practices. So they answer a set of questions, 50 questions, 60 questions at the first stage. to establish where they are as a business, as a small business, in terms of setting their own targets, setting their own expectations. Then if they want to take it a step further and they like what they found, and they identified the risks in their business, identified the operational lapses or potential areas that could endanger their business in the future. We are all here talking about the future, how to future-proof businesses. Then they can take it to the next step by arranging through us at no cost to these SMEs, to the next level by engaging with our consultants that we will arrange for, in order for them to understand further what is needed there for them to set their own targets and their own expectations, and craft their own roadmap towards becoming more sustainable. So this is when technology, I mean, if you do it on a manual level or at a one-on-one level, it will become very, very difficult. When we talk about, in Malaysia, for example, we have close to 1 million SMEs. These are all small businesses. So when it comes to engagement with the large number, with the mass market, it becomes very, very challenging. This is where technology can come and facilitate, through the appropriate tools, access to these services. Now, what the principles will do to us is will give us that standardized approach. We know what we are setting when we talk about inclusion, when we talk about climate risk, when we talk about biodiversity, when we talk about many other concepts. We have a standards approach to this. When we set our targets, we know that the methodology that we use is standard as much as we can to what everyone else is doing, or to those in the other markets are also doing. This is a huge advantage here. Now, going into the future, if we build this, and this was, I think, the missing piece of the puzzle there, that banks are doing their own strategies, they develop their own tools, they develop their own risk management policies, but then the interpretation of that will be different from one bank to another. The principles have come across now as providing a common platform for us all to start understanding these together and have a one unified approach to this. We are still at the beginning. We just started. 2 years in the life of an infant is not much, but we are on solid grounds. I think we can only hope that more banks will join and more banks will learn from this experience and what we have, what we are building together.
Hassan, just building on your point, what would you say are we've talked about the technology that's enabled to support the SMEs, but what are the sort of core skills that then you're needing to give the colleagues that work in your organization?
Sorry, say again, what's the
sort of core skills for your workforce? What would you say are the sort of core skills? What's changing in that area?
I mean, skills are one thing, but the training and the knowledge perhaps is what most of the gaps are identified. Skills of a junior banker and the skills of a middle management banker and the skills of a senior banker are common. These are people who are frontliners. They understand their customers. They listen to their customers. They understand their needs. And the main skill here now is that we are trying to move from being a product-focused engagement with customers into a needs-focused engagement with customers. We try and design our products and services to the needs of the customers with a view that we're looking at the future. We're looking at future-proofing those customers' needs. They may want to enter new markets. They may need to deploy new technology in order for them to understand better their impact of their products and services. They may want to green their own operations, and we have some tools there that will help them become more energy efficient. And at the same time, it has to work for the customers and also for the bank. Customers will have to, they'll have to, by using energy efficiency technology, they will reduce the cost of their operations. They will reduce the impact of their businesses, and they can get the advantage of labeling their products as such. So this is where we come here and we engage with our customers, and this is the type of skills that are needed going forward by banks, so that banks and bankers need to understand the needs of their customers beyond just the credit needs. What is needed for these customers, be them individuals or businesses? What are their needs in order for them to spend their money wisely, to save their money wisely, to also do their business into the future wisely? We are at a cross point now where things are changing. We have definitely reviewed a lot of things on individual level, on society level, on the economies now are reviewing the way they do businesses. And we are at a crossroad now where things will change. So we are hoping that, with this new era that we are entering, that there will be more focus on impact measurement, and we will design products and services accordingly.
Thank you, Hussam. Tony, I see you nodding your head in agreement.
Okay.
There.
I was saying that for the skills, perhaps you, in some cases where you are working with the bottom of the pyramid, you may need an entirely different type of workforce that know how to do like social work, organizing people in groups, and making sure that the working in group create some security for the institution, that's for the financier, the bank, and also provide kind of knowledge sharing among them. So it's not for us, our experience, that in some cases you require non-banking staff in the usual, not the usual bank officers to do that type of organization. I just came in, I'm sorry, because of you asked for the special skill that the staff would require. So in our experience, you may need, in some circumstances, specially trained staff that will do something that look like social work, organization, and creating competency around what this either women groups or farmers or people working in the leather industry at the very bottom of the industry.
So Hussan, that's really focusing on that, the financial education aspect of it, and helping those customers. So you're needing actually to have different types of skills for people that you employ now. Yeah, thank you so much for sharing. Tony, can I come to you now, because I did see you nodding as well.
No, I mean, good, very good points. I mean, at the end of the day, the business opportunity for a bank is not only to paint your balance sheet in green or for social. The bad value is to help your clients to make this evolution and this transition. And this means advisory services and technology is absolutely critical to make it at a larger scale. And also the right skills in your team, it's absolutely critical as well. So you work for financial inclusion as a priority. You have to embed financial education as part of your value proposition. And so this is absolutely critical, no? And if you focus on climate, you have to focus. What we have learned is that I agree that when we have big corporates, we are starting to have a shift in our dialogue, no? We move from a dialogue more transactional to a conversation more strategic, no? Talking about the future of your clients, how you can help them. I think sustainability adds a lot of value, and the business case is clear for big corporates, no? But when you want to go down to SMEs and to households, you need technology at a massive scale, no? And I really congratulate Hussam experiences about SMEs that he explained, and we have something similar. Apart from that approach, we have also complement with additional layers, no? I mean, with the additional initiatives. We have learned that if you want to go at a massive scale, you have to be very focused in this conversation with your client and use technology as much as possible, no? In our case, what we have done is we have an SME carbon footprint tool that is embedded in our website, and we have today already in Spain 200,000 SMEs. And now we have launched also in Mexico, where through using artificial intelligence, we provide a good proxy of the carbon footprint for that SME, how it compares with other SMEs, and how can be improved. And then you raise awareness about the topic, and then you finalize with advisory and with financial solutions. but focusing the conversation in a very specific topic and using technology, not asking invoices to load the invoice and then calculate. No. Automatically, we can make a good proxy of carbon footprint. And we have launched yesterday also this solution in our app for individuals here in Spain. So we think that this type of approach, using technology, AI, to provide specific information to customers, to raise awareness about the topic and see how we can help them in this journey, that helps a lot. No? And coming back to skills, technology is absolutely critical. We have a training internal plan because sustainability is a new set of information, new set of knowledge, and we need to train our bankers from the global leadership and the board to the last employee at the branch. So we have developed a complete plan using this three-level approach with the valley contents, mountain contents, and summit contents to create a journey to be trained on sustainability. And for instance, we have developed a mandatory training program, 2 hours online for our 120,000 employees, already covered by 60% of the employees. So I think this type of initiative is absolutely critical because we have to understand better, to have this conversation with our clients, adapting to the requirements of each one. No, so to the corporate clients, SMEs, or obviously to individuals as well.
And I think the challenge there, isn't it? It's the complexity that the conversation takes. So you're right, like for the smaller customers, then it is a technology solution, but there's multiple layers within that, and you do need to have greater expertise as customers become more sophisticated as well. Johanna, can I bring you in actually just to talk about the sort of core skills that you've seen that are being developed and that we might need in future?
Yeah, sure. I mean, adding to a lot of that, I think was already mentioned by my fellow panelists. But I'd say in terms of skills needed, I wouldn't say that new skills kind of are needed. And generally speaking, I think it's kind of the same skills you would need for all normal banking jobs. You know, quantitative skills for risk managers, strategic skills for business development, analytical skills for analysts, and so on and so forth. But I think what is really vital, and some mentioned it before, is for all different job roles there are within a bank to have a certain level of understanding and expertise around ESG issues. So I think it's more about using existing skills at all levels, but layering in ESG factors in job roles in the end. So a lending banker, for example, wouldn't need new ESG lending skills, but more of an understanding about sustainability to be able to understand the customer's business model and their impact. And that, of course, is where it becomes a bit more complex, because the tricky bit is to integrate these factors, the ESG factors, into what's mostly a largely digital process. And I think that's also where the technology aspect comes in actually 2 ways. I think the first is that banks really need to have systems, as it was already described by some of you, that allow them to measure impact. For example, how does the CRM system of a bank record a customer's impact? And then the second aspect, I think, is because there's so many bankers working in large banks that we have among the PRB signatory groups, will also need large scale online programs to really mainstream sustainability. And I think one final but really important point is also about, if you want real change in banks, we also need far more people to understand ESG issues, not just senior positions or specialist niche departments, but really how sustainability affects every job role. So the programs set up, they really need to gain popular support, so that all employees fully understand what their role is and how to implement sustainability in the end. That is to make a link, from a high-level strategic target to one's everyday business within a bank, whatever that role might be.
You're absolutely right, because if to embed the principles, it's about cultural change as much as that technical knowledge, and that means everybody has to be involved in that. So I'd absolutely agree with that. So building on those points then, and Tony, you touched on it as well. So what might we see different in terms of customer experience moving forward?
Well, yes. Trying to elaborate a little bit more about what I comment is we think that the customer experience has to change because and you have to adapt to the different level of different clients. As I said, no, from corporate clients, when you embed sustainability, you make a shift on the compositions, and it's very high value for the bank, because at the end of the day, these topics is very interesting for the CEOs of your clients, corporate clients. So CEOs of your clients appears to the table, and that's obviously provide great engagement and a more strategic conversation. So, and that requires a high level of knowledge about the technologies and the challenges that your client has in front of them. And so you have to build on that, no. But I would say that on individuals and SMEs, that's a more difficult one and a more challenging one. What we have seen, as I said, is that we need to help make things easy to help them in this transition. And we fully understand that we have to have a holistic approach to sustainability. Always you have some SMEs that are already taking into account an holistic approach to sustainability in some cases, no, or building business propositions specifically on sustainability, no, with new business lines, with specific clients, or with whatever. But the problem is that we have to help the whole economy to transition and to embed to the whole economy. So the experience that we have is that we need to focus, as I said, on key specific areas where our clients may have interest, and we can help them to make specific actions. And so that's the reason why we have, although it's not enough, we have focused at this moment in this first phase on climate, trying to spread this commitment of carbon neutrality by 2050 to the whole customer base, no, and focusing on this type of tools through digital devices and apps, and providing good training with our network, no, because otherwise it is quite overwhelming, no. Any SME or even any individual can say sustainability is great, but it's overwhelming and nobody knows. We have done a lot of research, and the problems they have in general, our clients, is they don't know how to make specific steps on that, no. So we have to go that narrow and focus on a specific topic in order to get results and create impact. That's what we are learning. It's only first steps at a massive scale, but the change will happen not with only corporates. The change will happen when we help our clients to succeed, including all type of clients with different solutions for SMEs, for households, with green mortgages, with specific investments for renewable energy or for energy efficiency or whatever, but not only for the big corporates. That's the massive challenge that we have as banks.
Thank you, Tony. Hussam, can I bring you in here? So in terms of that, changes in customer attitudes and stakeholder requirements, what do you think in terms of customer experience the changes that we're going to see?
I mean, customer experience, now we have technology there, we have the fintech challenges, we have all this accessibility, and customers can change banks or can change providers. And however, when COVID-19 happened last year, and at the peak of that pandemic, once we, a few months into it, we did a survey amongst our customers, and when we wanted to understand what are their expectations and what are they looking for in times like these, and basic requirement or expectation from customers is trust. They wanted to feel that they have a bank that they can trust, and also a sense of community, that in times like these they can go back to their banker and get advice, get some kind of understanding of their needs. Now, technology will help facilitate that, in terms of getting the feedback, processing that feedback, the speed of getting things done, making life easier for customers, less paper, But at the heart of everything, the trust element is what customers want from their bank. This is the thing. Believe it or not, even that's something that people still will have that trust with their bank than with a fintech. Fintech is brilliant with technology, with the ease of doing business, and maybe the speed at which you can do a transaction. But when it comes to times of need or times of crisis, like what we have been going through for a year and a half now, it's the trust that they want an institution that will understand their needs, that will accommodate their needs, and will work together with them. So that's the main shift in attitude, is that they have higher expectations of the bank. They don't want the bank to just manage their calls quicker, or they want a bank that they can turn to and understand their needs exactly how they want them to be understood. So this is the major thing. We're going back to the basics of banking, the community banking, and how we can give customers that element of trust. How can we get them to feel safe with their bank? I think this is the major shift, and this sits very nicely with responsible banking. This is what responsible banking is all about.
Yeah, absolutely. I see. I'm going to bring Hassan in because I can see him nodding there. Just your thoughts really in that customer experience.
I totally agree with Hussam that it's a question of trust. But for our focus in JA is really customers will see more collaboration with stakeholders, because for what we're trying to do with to emphasize our social impact, we need to work with other organizations that are also interested in eradicating poverty, increasing the standard of living of people through financing. Through financing, through some specific interventions to enhance the skill and productivity. For example, when we talk working with farmers, we try to work with an NGO that engage the farmers to increase their yield per hectare, because it's not just enough to finance, but it's also important that when you do the financing, the productivity is enhanced, so that the farming become profitable business for them. The bank alone can't do this, so we need collaborators. We work with collaboration with those who have the competency to work with farmers in groups to increase their yield per hectare, and we provide the inputs. So collaboration is one area. Financing things that individually they cannot do. For example, when we work with the leather groups, we buy machineries that individually they cannot afford, or they can't get a financing on, but collective they can get to use these machines. So collaboration is one. Financial literacy, getting those who can provide that intervention around them, knowing how to manage their finances, how to plan, and also separate the business from their day-to-day or family finance, so that they can operate in a way that they graduate from being micro to SMEs, from SMEs to something larger that is able to employ a number of people. So, of course, the working with the bank, we also definitely, this is an era of digitalization. We will have to be able to scale all of what we are doing. Digitalization will have to come in to support the scaling and making this business proposition that other stakeholders can also link in to provide an ecosystem where some of the SDGs can be. For example, when we work with women, one of the things that we try to do is to provide insurance service on top of financing, that we give them equity. Then we provide finance. We provide Takafu finance, Takafu insurance. Then we are working to provide group health insurance for them. And on top of this, as we move, working with collaborators are able to provide a cooking system that will help them reduce the impact of their negative impact of the use of wood and other substances that degrade the society. So all of this will require, what I see to do this journey will require collaboration in our own environment. In different environment, as I said, requires different approaches to addressing the SDGs. So in our own situation, to ensure sustainability, will see more collaboration with other stakeholders to work with people to increase our social impact on the society. Of course, this ecosystem can also be used to reduce the environmental impact, because when you sensitize the people, the understanding around the environment, even at the grassroots, can be spread, and they will then be conscious on what type of resources they should use in order to reduce their impact, negative impact on the environment.
Thank you, Hassan. Joanna, we briefly, we'll actually quite a lot there touched on that sort of wider stakeholder group, which I suppose is a different perspective again about managing those expectations. Would you like to?
Absolutely, yeah. I mean, we did ask civil society organizations for an independent view on PRB progress as well. So I'm talking about that stakeholder group now. You know, why does civil society, maybe also a bit of policy makers? Of course, the expectations for stakeholder groups, they vary. Now you have described clients, customers, expectation being, you know, having a really easy, understandable product in the end. That makes the decision quite easy. Whereas, you know, the expectations of, I'd say, wider society are quite clear towards banks. There is an awareness, okay, about the planetary crises that we have, climate change, biodiversity loss, pollution and waste, social inequality. I'd say that awareness is definitely there. It has increased, and that awareness is not just there, it really translates into a call for action towards banks to tackle these crises, and also to tackle them in an integrated way. That means to not lose sight of, you know, some areas and focus only on one, but really to have, for example, to develop nature positive finance with the pace and nudges that it already has with climate, for example, and not lose sight of human rights, gender equality, social issues. So of course, that call for having an integrated approach, really tackling different big complex things at the same time, makes it quite complex of an environment for a bank to navigate in. But that is one trend that we see, you know, from wider society expectations as well. And of course, now translating that into easy, understandable, accessible products for clients, that is quite a topic in the end. Yes,
it's definitely a huge challenge, but our panelists are definitely enthused and up from that for the activities that they're taking right across from their organizations that they've shared. I've got sort of one final question, and then we've got quite a lot of questions coming from the audience. I'm going to try and ask some of those before we wrap up our session. But and Hassan, I'll maybe come to you initially for your thoughts on this. So alongside, and I suppose it links to Johanna's points as well about that wider society and the issues that the expectations that people have. So alongside the UN Principles of Responsible Banking are the wider UN Sustainability Development Goals. How are these having a broader impact in your organisation? Oh, Hassan, I think you're on mute.
Yeah, your question is around the SDGs and the specific ones that we have more positive impact on. I think the first one is the SDG number 1, which is a reduction of poverty, and related to that is also the zero hunger target. So these two are quite crucial to us, and that's why when I intervened earlier, I talk about working with women groups because they are the most vulnerable in our society. We specifically target them to work with them because they are excluded not out of choice. It's because for us, exclusion is economic exclusion. It's not just necessarily financial exclusion, because financial exclusion can be treated by providing access, providing either through digital or through physical presence of financial institution. But economic exclusion cannot be provided by just a bank being present or by a digital solution. So rather than give loans to these groups, we actually stake our money and give them equity. So we give them money to go and trade based on a profit sharing arrangement. So this is to kickstart for them some kind of activity that will bring them into the financial system. So you are now including them because you now have given them the chance to be in the system, because hitherto they didn't have the resources to even try to bank or to maintain a bank account. Working with farmers to increase the per hectare per hectare productivity also means eradication of hunger, increasing income per capita, and we do this working with partners who work with the farmers on the ground to educate them on the best farming practice and the use of inputs, which we then provide through finance. And of course, good health is also addressed in this way, because if you are able to address the issue of poverty, they address hunger, the natural consequence of all of this is that people will have better nutrition and therefore have more immunity and are able to defend themselves. So we think that working with even just two can cascade around, because for example, if you're working with this women group, they are able to ensure that their children goes to school because they now have something to do, because the women are very critical when it comes to the education of their children. So a number of SDGs can be addressed in our own community if you address number one, number two, and they are number one, number two because they are also critical to what happens in society and of course what happened in the world today.
Thank you, Hassan. Tony, can I bring you in just from BBA's perspective, so how the wider sustainability development goals are impacting in your strategy?
Yeah, well, we have selected 5 SDGs as a bank, 3 related to climate action, which is the number 7, number 13, and also number 12 regarding our circular economy. And then we have 2 SDGs focused on inclusive growth, which is the second area, number 8 and number 9. No, and as I said, these are the SDGs we have used with intentionality to develop solutions, financial and non-financial, for our clients in all our markets. No? But beyond this, let you know that we also have a microfinance foundation, BB Microfinance Foundation, that we found in 2007, so 14 years ago, in Latin America, where we are providing financial support to close to 2 million micro entrepreneurs. In that case, obviously, the SDGs is number 1. Which is very relevant because we are providing around 1.2 billion euros every year in macro loans in Latin America. So this is also a very relevant initiative that we have. To conclude, I would say that for us, SDGs has been very powerful when we had that internal review of our strategy. It was our chairman that challenged all the leadership to understand better the dependencies between the different SDGs, the challenge that we have in front of us, the business sense of each SDG for private institution, and he challenged all the leadership to make this framework useful for our business. And I would say that now we are totally convinced that the SDGs is the agenda that is like is the biggest business opportunity for a bank for the next decade. So for this decade, so this is how we see the SDGs itself.
Thank you, Tony. Hussam, have you got anything you'd like to add there?
I mean, I'll just echo what Anthony and Hassan mentioned. I mean, the SDG, the good thing about it is that it gave us this reference point, so that when we talk about future, when we talk about responsible banking, we can align, again, the first principle here, we can align our activities, our targets to that of the government. The government of Malaysia, for example, and all other governments that have signed up to this, they have their own set of targets of achieving the SDG. We have, in our business, have selected about 7 of these. And out of those 7, we built, we've broken them down into further sectors and subsectors, identified new emerging industries and new emerging trends. You know, smart farming, precision farming, food technology, all of these new ideas, new businesses that are emerging. And then we based our targets and our plans for the next few years based on that. How do we want to grow this? Where do we see ourselves? It was very, very good blueprint for looking into the future. Like everything else, it's a document that helps. It's a set of standards that helped us align with the rest of the world, with other institutions, and with, most importantly, with the local government, so that we know what they're doing and we can align our objectives to theirs. In that regard, it's very, very useful set of targets and goals that we can all work towards. We have a number of products that we have designed and came out as a result of this. And I'm sure there will be more to come in the next 8 to 9 years. And I'm sure those goals themselves will evolve into something else, because I think it worked. I think the idea of having one set of global goals helped a lot in terms of aligning our solutions, because the problem is global and the solutions have to be global as well.
Sam, thank you so much for sharing. And I think I get this sense that different regions, different countries, different organizations are prioritizing the things that they can actually quickly make some quick wins on, and then there's the longer development things. So I suppose maybe bringing in Johanna just for maybe the final thought on that link would be useful, and then I'm going to just go into some quick audience questions.
Can you say again, what link again?
Just the link between the UN Principles of Responsible Banking and the wider sustainability goals and the impact that's having on the organisations and their approaches.
I mean, we'll continue to have that, request for aligning with the SDGs, showing positive as well as negative. I can only echo that negative contributions or possible impact on the SDGs is also quite relevant. And also for the Paris Climate Agreement, we'll see what Glasgow, what COP26 brings, whether that changes anything on the climate agenda in terms of international climate goals. But of course, Paris and the SDGs will continue to be as relevant as they have been in the last 2 years and the last, I don't know how many years.
Until we solve it, it'll be a continuing. Yeah. I'm going to move on to the audience questions, and Johanna, I'm coming back to you, but I think you've actually answered this. Andreas has asked whether a bank needs to commit to right at the beginning to the deadline and targets set with the principles of responsible banking, or is it possible for them to have a discussion to find out more about it, do their internal assessments, and then decide to commit to the deadlines? So I think they've got 4 years, but is it 4 years from when they sign up, or can they do some research and discussions first and then sign? I think that's the question.
Well, of course, they can do some research and internal discussions before signing up to the principles. By signing up to the principles, it's part of the commitment to implement them within 4 years. And implementation means analyze the impact, and then set targets in areas of most significant impact, and also report on these steps. So that's basically the framework in very short. What's important to understand is that the targets that the bank comes up with doesn't have to be in the time horizon of those 4 years. For example, for climate, we see a lot of banks having net zero by 2050, so a longer time horizon. Therefore, the target, it needs to be time bound, but it doesn't have to be within the 4 years of implementation. That 4 years of implementation is there to really implement the principles and to set the targets. And then afterwards, working towards implementing and reaching the targets is the big thing to do then.
Thank you, Johanna. I've got a question for Hussam and Hassan here, actually. So you can tell me who wants to answer this one first. But the more tricky one is about what you have enjoyed most, and when it comes to and not enjoyed when coming to executing the principles of responsible banking. So is there anything that you've found, I suppose, you found really useful and enjoyed about it, and stuff that's been more challenging? I don't know if either of you want to answer that one. So Sam, I might come to you for that.
Okay.
What you've enjoyed most.
I'm unmuted, so I can answer probably first. Hassan is still muted. So what I enjoyed most is this is a very, very meaningful engagement and set of principles. This is where the future is. This is where banking should be. For us to speak about responsible banking is really, really a timely topic. I mean, there shouldn't be anything irresponsible anyway. But the fact that we are looking and addressing that there is a problem that needs to be addressed, and also we're looking into the future and the global problem, and we're trying to resolve it by, all the set of values that are involved here, it's definitely a very rewarding and enjoyable thing to do, to put banking to where it should be, to support economies, businesses, and individuals as well, achieving their aspirations. What I didn't enjoy the most is, I would say probably the challenge was mostly when you are the only one committing in a market, and then you probably there will be some sort of resistance as the only player who committed to set of values. Even though you are foresee the future, you are seeing that this is the future of businesses and banking, and there'll be no escape. And there is a reward being the first, but being the first also can be a challenge when no one else in the market is doing it. And sometimes you make it very tough to discuss with customers, and with other competition becomes slightly more stiff. So this is what I didn't enjoy the most, is the fact that not everyone is on the same page.
It will be soon, hopefully, and I can see that
yes.
Hassan is nodding in agreement. I think you might have the same sort of thoughts on that. Hassan, I don't know if you've got anything you want to add.
Yeah. I think the most exciting thing about these principles is that they are reasonable. They are not. They are facts of life that only if you deceive yourself, you deny. Because whether it is about the environment, making sure that we maintain a healthy environment that will be sustainable for us and for the generation to come, or it's making sure that we are brothers keepers, so that because if you don't have social stability, you cannot have economic stability. You won't have peace in the world where people are hungry and poor and angry. So it's quite rewarding that you are part of a system that is deliberately looking to do good. I mean, it's quite rewarding and quite enjoying. You can't get tired trying to do good. and especially when you see the result. When you see the face of somebody who never had $500 at a go, you see the face of that person getting a facility, a financing facility of $1,000 or thereabout, going to enhance his capacity and also life and be part of the system, part of the financial system. That's rewarding in itself without doing any other thing. You find that that's rewarding. And if in the process you are also able to change the worldview of the person, forever you have changed a human being, and you don't know the multiplier effect of what that person can do with the children, with neighbors, and with other human beings. So I don't have any regret. So I don't know the other side of this journey. I think that it's if there is anything that one finds an ease with, is because you can't run with this, because it's a change. You cannot do. It's not a revolution. It's obviously going to be something that will be taking time to change everybody to come on the line.
Hassan, thank you so much. I'm going to finish on that now because we're out of time. There's some complex questions that I think we could have had a whole different panel discussion on. I'd just like to really thank the panel for today. Thank Oliver for sharing his keynote this morning. I think finishing on the note that you can't get tired of doing good is actually a really good note. Thank you for such an enriched discussion. Tomorrow is the final session of our annual banking conference. My colleague CEO Simon Thompson is the chair tomorrow, and he'll be looking at this final section on building on today, actually, to look at what does responsible banking mean for actual education, training and development for bankers globally. So please join us again for Simon's keynote tomorrow, and thank you all for your time and questions, and thank you so much panel for today. Thank you. Have a super day, everyone. Bye-bye.
Thank you. Bye-bye.
Thank you. Bye-bye.
Take care.